Good morning, traders. It is 8:02 a.m. Chicago time on Wednesday, the 25th of January, 2023. This is episode number 2399. Tomorrow's is 2400. Thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Thank you for the sound check. Here's where we are in our convergent trading pre-market summary sheet. Again, you can grab this for yourself every morning on twitter.com/conv trading, CONV trading, as shown in the bottom right box there. Market sentiment or risk exposure this morning, mild risk off. Mild risk off with the NASDAQ leading down 1.71%. The NASDAQ's below that 11,800 that we've been talking about quite a bit. Also, the S&P is below 39.92 or trading in the area. A lot of this is being attributed to the big miss by our friend Soft. Microsoft came in and warned of growth. Microsoft adjusted EPS on Q2 2023 came in at 232 versus 230, so that sounds like a beat. The revenue was 52.7 billion versus 52.99. It stated that Azure and other cloud revenue growth of 31% was driven by strong demand for consumption-based services. However, it noted growth is too slow. That's a future statement in its commercial business for the rest of fiscal year 23, and that fiscal year operating margins are expected to decrease around 2% year on year, excluding Q2 charge and a favorable impact from the change in accounting method. The stock market in the pre-market looks like this currently in real time. Soft is down 3.11%, Google 1.64%, Apple 1.17%, Meta 1.4%. Amazon taking a kick to the teeth here, almost 4% at some point this morning, 3.5%, and Tesla down 2%. So it's looking a lot like a tough play for long traders today. So that's what we're really dealing with this morning. Earnings this morning, there was a lot today. Alvance came out 39 billion in revenue, quite large. Don't hear much about it. AT&T. Boeing was expected to announce 26 cents in EPS and 20.38 billion in revenue. Boeing came in at negative 1.75, missing its earnings estimate by 773%. 773%. Boeing BA. It missed its revenue by 2%. We got Progressive this morning, General Dynamics, Abbott Labs, and others, and I'm sure you can find an earnings calendar to look at. What's important also is that after the market today, we have Tesla. Tesla's estimated revenues 24 billion, expecting $1.13 a share. We're also getting IBM after the close, 16.4 billion in revenue on Q4, expecting $3.60 a share. And again, you can do your own research into earnings, plenty of calendars online, but that's what we've got in terms of earnings. Really, that's where the focus is right now. There's not much to say in terms of fundamentals. We did get the IFO business climate, which is a high tier number for Germany this morning at 4 a.m. At 4 a.m., it came in at $90.20, which 90.2, which is in line. Expectations came in at 86.4 versus 85, which is better. And then other than that, we have the Bank of Canada interest rate decision today. They're expecting to hike by 25 basis points. That comes out at 10. You might want to pay attention there. Not a huge driver, but just another indication of a central bank and its posture. Okay, and then that really wraps it up. We do have a 43 billion 5-year note auction. Let's focus on the S&P for a minute. The stats here, you see it in front of you under the ES overnight stats. The ES clearly in a trend down again. It was in a trend down yesterday, except the range is quite a bit wider today. The ES has traded 224,000 contracts, which is well within what we would call normal. Remember, the mode, or the most common value for volume at this point is 230,000. We're at 224, so it's pretty much in line with the last 252 sessions or 1 year. The inventory overnight's 92% short. 92% short, and this means that 92% of the volume occurring overnight took place underneath the closing price. So the inventory skewed short. Range is 55 points, which is much better than what we've seen lately, which has been in the 20 to 25 range or so. And we've shifted the point of control to about 4,000 in the S&P. Let's take a look at some charts. If you recall, yesterday I talked a little bit about the fact that we are underneath this. We pushed to highs. We pushed to the mid-century figure. We went to 40, 53.75. So let's call it 40.54. I prefer to round to the next handle. And we opened below, and I talked about the key trade yesterday was what? 40.36. Test of 40.36. Expected a push to 40.36. And then I had discussed that it started to look weak in terms of how it closed on Monday, and that we are looking for a test of 39. Do you remember the numbers? 39.80 all the way down to 39.60. And I was looking yesterday for an early push up to sell into 4,000, consolidated to 4,000, and was hoping for it to continue, but it did not. It ended up holding this 40.36 for almost the entire session, and then this morning we get the move down on earnings. So really, again, it is not my business as a trader, nor as somebody who's broadcasting 2,400 episodes of this. It's not my job to sit here and try to be some sort of tea leaf reader or something. My goal is not to read the future here. My goal is to look at the behavior and then do my best to come up with the context and the narrative for how we got here, so that we can take a guess as to what it's likely to do next and the areas in which we expect these reactions. And then once we figure that out, the market confirms, then it's my job to find a placement in a trade that gives me a decent risk-reward location, to take the trade, and then the rest is up to the market. It's not up to me to decide what the outcome is. It's the markets, and the outcome is always and forever and ever and ever random. Okay, so risk control versus target control. That's what I can do. The market has to agree with it. So what do we have today? Inside day, exactly as expected. We ended up pushing to settlement, so we had a bit of a gap to settle trade yesterday. I wasn't able to get on that setup, and then we ended up pushing towards the 4,000, which was what was expected, and it just wasn't. It didn't quite get there. I think it stopped yesterday at like 4,005. And so here's what it looked like on my trigger chart. Okay, so we open up down here, really clean opening swing. You could see a very clean opening swing, breaks the lower opening swing, pushes up. We have our first impulse higher. There was a trade in here which should have been taken at 20.50.21, and unfortunately I stocked this trade long on the impulse up because what am I looking for this early in the game? Finding an impulse right here. What am I looking for to try to buy a pullback of that impulse? What's the goal here, right? So trying to find a spot in here. I end up trading against VWAP, which was premature. It ended up pulling back to the opening swing high, and the structure, the price structure before it, just a beautiful setup. So looking for a long, for what? For the gap to settle. For the gap to settle trade. So looking for it to push into the 36 area. As discussed in the pre-market, that was the big trade of the day. And we I end up just botching this, and we end up pushing part way and then rolling over, breaking down, and then coming right back. And so right when that happened, I switched from short bias early, long bias immediately after because of the way it impulsed up, to neutral bias all the way through to the point where it broke the IB high. Once it broke the IB high, buy long bias, but by then it was too late to catch the gap to settle trade. Okay, key trade for me. And then we end up with this chop fest. And you could see every time it dipped, every time the market dipped, dip, push, dip, push, dip against VWAP, push, dip again against VWAP, push, dip against mid, push. And then it ends up pushing at the end of the day with Microsoft and then selling off after the market closed. Okay, so yesterday was very, very bouncy, was very, very balancy, and then today we are very trendy. So we open up, we form a small distribution, very little volume because, you know, Asia hasn't opened, nothing's going on, nothing to price in. We formed this nice little distribution here in the middle. Asia's priced in, so Asia's priced in right here. Then Europe opens somewhere in here. Europe opens. Europe generally reverses the trend. Pulls back, not quite to mid for the session there, and then they start to sell off. Then we have the IFO number right in here. We have the IFO number at 3 a.m. or so, my time. Remember this chart, I'm in Chicago. This chart is in Central Time. And then we have a consolidation near the low. We don't reject the low. We would expect to see one of these if buyers were really active. Buyers were not active, so we have a weak low, so we expect this to spill, and it spilled just now. And so we continue to push lower in what is a multi-distribution profile, active price discovery this morning, and we are pushing right into that 39.80 that we talked about on Monday, 39.80 as an area where now we may do some repair on this structure. If you recall, if you were here on Monday and watching and paying attention, I talked about the weak structures into 39.80, which starts us off, by the way, right away. And then, oh, thank you, friend. Bye. Which starts us off on this this quick slip through this poor structure from last Friday. So once we get offered at 39.80 and struggle to turn back up, we are very likely to continue down to where? What's the next key area we talked about on Monday? on the selling scenario. Where are we likely to push through? Do you recall? What are we likely to do on the sell side today if we don't find buyers? We get down to 39.60, but the target is 39.50. 39.50 right here. Brings us right back to this launch day, brings us back to the launch point. That clears out this poor structure, and then we are likely to balance. Again, we are likely to balance in here. Why? Because we're still in overall balance. We're still in this 39.90 area. And so this is what things look like. So my job today is very clear. I won't spend much time on the NASDAQ or the or crude today. There's a lot going on here in the ES. My job is very clear. I'm against the low of Monday, the high of Friday. We're opening right in this capitulation area right here. My job very early on, the open today is extremely important. My job very early on is to see if we get responsive buyers. So I'm monitoring very carefully, be that using order flow, just looking at the order flow and seeing how it's printing and the quality of the tops that it's printing on. Why is my order flow chart loading? I already have the data. It's kind of odd. Sorry about that. So you can see here there's a battle down by the low. Heavy delta to the downside, and there's a big battle. You can see that a lot of absorption going on. Shorts are trapped quite late here, and this is a short squeeze right here. Nice little short squeeze, good delta on that short squeeze. It did withdraw a little bit, but you can see it fought its way up. A lot of blue bubbles. So on the open, I'm watching to see if it lifts and starts to move towards the 4,000. If it's unable to, this is a very strong, the big trade of the day becomes a very strong opportunity to push down into the 39.90 MC point of control in this area. And then now we're looking for 39.80, which is below. So 39.80 becomes the first scale, 39.60 becomes the second, and then all aboard 39.50. So I'm rounding these numbers here because I don't really care about a handle or two. But this is the key trade, is if it just struggles to kind of push its way up. Now, if it facilitates very quickly and starts to run very quickly back to the 4,000, I need to back off. But if I see that the dome is just lifting, lift really hard, lift, fall quick, lift really difficult, fall quick, then I'm going to be primed to look for the short side, and I'm going to be targeting that 39.80, 39.60, 39.50, which gives us a really decent 30, 40, 50 points of range to the downside to do something with. If that is missed, it's okay. Let it come back through the open, consolidate, hopefully you have an impulse, then it becomes an impulse pullback continuation trade, lower price, but continuing to push to the low side. That's what I'm looking for today. Here's what that looks like here. So we're in this mess right now, right? We have tops and bottoms in this area, very key area here. Last week's close is right here. We're looking for the quality of it pushing up, and then looking for it to facilitate to the downside, and we're looking to come back right into this area. Poor structure beneath here. Already had poor structure here. We've already taken that out, and we're likely to run very quickly. Okay, I'll leave you with that. It's 8:22. We've been at it for 20 minutes. A real quick overview of the NASDAQ, actually. The NASDAQ, just beautiful movement here as always. Derivatives are not suitable for all investors. Remember, you're using leverage. You can lose more than the value of your account trading derivatives. But look at the NASDAQ. I put these lines on here. These are price action and profile-based lines. They're essentially just big picture stock zones that I just threw on here, even though we do, at Convergent, we do stock zones every day. But these are important areas that I expect the NASDAQ to test. So as we clear here with the NASDAQ, we're just underneath this zone in the 11,725 or so. The question becomes, does it squeeze back up into the 11,800, right back up here, or does it have a hard time, in which case I would start to target this 11,630, and then if it lets go of the 11,630, then the equivalent to the 3950 in the ES is the NASDAQ down at 11,530 right here. That brings us to this structure right in here. This brings us to the naked point of control down here at 11,535. That becomes the target for the NASDAQ. The NASDAQ's likely to move a lot faster, a lot harder today than the S&P. Okay, so in the case where the market actually becomes responsive, so this is very much a possibility that it tests down, fails to hold down, impulses up, required, impulses up, floats down, and starts to push higher, then you're looking at coming back to, what is the price? 40.13, folks. Remember, the market has memory. 40.13 becomes a key target. Not 4,000, no, 4,005 from a couple days ago, this low here. Not that. It's 40.13 brings us back into balance. So the buying, so if it does successfully squeeze and become responsive, which is very possible, right? It's likely to push to 40.13. That becomes the stop, the key trade, or the big trade to the upside. So you have your big trade to the downside, big trade to the upside. Same scenario for NQ. Crude has turned over just as expected and talked about yesterday, has really cleaned up, and crude is right in the middle of composite balance. Crude is very likely to just consolidate. Crude is expected to be in balance. Very cool action yesterday, pushes right through, and now we are solidly in balance. Good luck. Oh, don't forget, I'm going to be on a show today with Futures Radio Show with Anthony Cordelli, and there's a guest today from SMB. The conversation, it'll be Lance Brystein, and we'll be talking about what it takes to be a consistent trader. Very important show to watch, in my opinion. There's a giveaway that ends at 11 a.m. Eastern. The show is at 12 p.m. Eastern U.S. time. You can get all the details at My Edge. Actually, this is incorrect. I believe. Just go to edgeclear.com/deli. That's where you want to be. Okay, edgeclear.com/deli. You also have this information in the pinned post on the live chat. You have it on my Twitter feed, twitter.com/futurestrader71. I hope to see you there. Good luck with today. Today is likely to be quite active. Good luck. Watch your risk. Without watching your risk, you're just another gambler. Okay? Good luck.